What's going on, everyone? What a roller coaster of a day. Clearly a lot of stuff was happening today. I'm going to talk about why I think this run up happened intraday and then why I think we fell even lower. This basically goes in basically what I was saying would happen in the next few days in the market. And now in today's video, I'm going to talk about what the next steps are. I'm going to talk about the SPY, the NASDAQ, the IWM, the 30-year bonds. We're going to look at the large tech stocks and then the crypto markets to get a better view of the entire market as a whole. All right. So without further ado, let's get started with the video. All right. So number one, tomorrow morning, we have CPI data coming out in the morning, as well as some unemployment claims. So if these numbers come out favorable to the economy, then the stock market is going to basically take a hit. So that is at 8:30 in the morning, pre-market. Okay. The other thing is essentially the reason why I think the market started to rally intraday was that at 1 p.m. Apple had an event at 1 p.m. So the market essentially rallied into 1 p.m. and after their announcement and everything, we essentially just fell back down to the levels that we were supposed to have fallen to begin with. All right. So that is my thesis of why that happened. Right. And usually that is the case whenever Apple does have like a meeting or something important like that, since Apple is one of the largest companies in the stock market, right, and in the world. It would make sense that money would funnel into the tech sector and Apple and the SPY, right? Number three, a lot of people were saying that the reason why the market went up is because Ukraine basically said that they weren't interested in joining NATO anymore. But President Zelensky said that yesterday. So if that news were the case, then we should have been flying. We should have opened up green, and the international markets and everything should have also opened up green as well, and basically should have meant that the war would be averted, right? But currently that's not really the case in terms of the stock market, okay? So with all of that considered, right, we've continued on with normal, with the normal broadcast, normal program, right? I'm not, there's like a joke. Let me Google it. We now return to our regularly scheduled programming. There we go. All right. So yeah, the market is now back to its regularly scheduled program. So let's just take a look at this. All right. Number one, the SPY, clearly the RSI, you can take a look at this, is staircasing down. This is a very, very bearish. This is very, very bearish. What this is basically showing is that even though we had huge downside moves, this weakness right here is basically showing that we need a much, much heavier move to the downside for the RSI to become oversold. So the fact that these moves were happening and yet we're barely inching down is bearish in my opinion, and it's basically showing me that we're going to fall even lower. All right. The reason why I didn't want to get into any lotto puts is because the implied volatility is very, very high now. Okay, so we would need a very dramatic move to the downside, and we would need to put up more money than we normally would for us to profit at the same rate, essentially. So for anyone that are, that's buying options, it wouldn't be as favorable because the implied volatility is much higher. Okay, so that's why I didn't feel the need to alert any lotto puts. But in general, I think that the market is going to continue falling because of the various reasons I'm going to show you today. All right, so the RSI, clearly weak. The MACD, we just crossed down below. So it means that there is at least another day, at least, before we fall lower. And number three, we can see that the lower level of the Bollinger Bands are now starting to really, really fall much lower as well. All of those things are basically pointed at a lower move in the SPY. All right. So there's that for the SPY. Let's take a look at the IWM. The IWM came back and retested this trend line intraday absolutely perfectly. You can see that it literally came back and tested this. It failed. and we closed below major levels of resistance, closed below 195, and we're basically at sort of the low. All right, this is not a bullish close. There's no reason to go long here on anything, and the IWM clearly looks weak. We had a very small green day on the IWM, yet the RSI is basically showing strength. So that's sort of not, this is sort of neutral. It's not a completely terrible thing, right? But this is not a bullish sign on the RSI either. And the MACD is starting to really sharply fall down below as well. And the yellow MACD line is starting to point downwards as well, which means that the overall momentum of the Russell is starting to point downwards. The other thing is that we are also far away from the lower standard deviation level, which means that there's a lot pointed that things can still continue to fall lower. All right, so that was that for the IWM. We can see that there was bearishness in the SPY and the IWM. Let's now take a look at the large tech stocks, the 30-year bond, and the NASDAQ. Apple clearly looks very bearish, right? So number one, we just closed cross down below on the MACD, which means that there's at least another day or two of downside room, at least. Usually this is exactly what happens when we fall down and when we cross down below on the MACD and the stock itself is also falling, there is at least another day or two of downside move. All right, so that's that. Number two is we failed to close above this important resistance level. All right, number three, the RSI looks terrifying. You can see that it looks even worse than the SPY's RSI. This is even worse of a close than what we saw on the SPY, and the RSI is moving even slower. Like, this is literally barely even moving here. This is really, really bad. Basically showing that there's a lot more room to the downside. And then the fourth thing is the lower level of the Bollinger Band is sharply falling as well. So there's a lot more room to the downside. So Apple clearly looks bearish. Okay, Microsoft, same concept with the RSI, looks bearish. It is a good sign that we are closed outside of the lower standard deviation, the lower level of the Bollinger Band again. But intraday, we broke down below February 24th's low. So this is not the best sign either. So this is not a good sign either. The MACD is really starting to sharply fall down. And overall, this doesn't look like a reversal to me. This doesn't constitute a bottom just yet. Amazon also does not really look bullish at all. Like, you can see from the RSI, it's terrifyingly weak. Basically showing that there needs to be a huge move downwards, and hopefully tomorrow we can get a solid move to the downside on Amazon, essentially. And what could end up happening, which would be nice. So essentially, this is one of my plans for tomorrow. Amazon this is the second day that Amazon closed outside of the lower standard deviation. All right. The best case scenario, which would be a very, very easy trade, in my opinion, is if we basically open lower again, right? And the good thing about this is that the lower standard deviation, right, the lower Bollinger Band is very far away. So as long as we open outside of the lower Bollinger Band again, so you can see that the lower Bollinger Band is over here, right? It'll be up here, whatever. As long as we open lower again, right? What tends to end up happening is we do, regardless of where we open, that could be a nice dip buying opportunity. All right. So just keep that in mind for Amazon. But again, regardless, right? Regardless, it's not going to be an automatic trade, but just the fact that this RSI is really, really weak right now is basically showing me that there should be a much more dramatic move to the downside on Amazon. The MACD is also showing, it's oversold, which is nice, but this is not a bullish sign either. Google, Uh, it's not the most bearish, right? It's similar to IWM, how the IWM had a bit of a green day and the RSI is moving upwards, so it's not completely terrible. But if the rest of the tech sector starts to fall, then Google is also going to just break down these lows. And, you know, it's still moving upwards in terms of the yellow MACD line. No, sorry. The yellow MACD line is now starting to basically fall down just a little bit. So it's not the most bearish, right? But the other stocks look much more bearish. Now we can take a look at Tesla. Tesla doesn't look terrible compared to the others, right? It held this 780 support, closed above 800. The RSI is moving upwards. We had a green day regardless of the blue MACD line falling lower, which tends to be a bullish scenario, and the fact that we are basically making this bull flag here, and we technically came back and retested this lower level of the bull flag. That could be an interesting play to the upside if the rest of the market starts moving higher. But what we just saw from the SPY and the IWM, things look bearish. Apple looks very bearish. Amazon looks bearish. Microsoft looks like it's about to make somewhat of a bottom. But in general, a lot of these stocks look like there's still more room to the downside. So there's that for these large tech stocks. Let's take a look at the 30-year bond. Okay, so the 30-year bond, obviously, it's not going to just continuously just skyrocket upwards, right? There needs to be some period of consolidation, and it looks like we are holding above 157, right? So in general, as long as we are holding above major levels of support now, it is a good sign that eventually strength is going to trickle in and follow through into the tech sector. Not necessarily overnight, not necessarily anytime soon. Sorry, not necessarily like, you know, within a day or two, basically is what I'm saying. But eventually what happens is when the bonds start to break lower and the equities are strong, what ends up happening is the equities start to fall because the bonds fell like a few days earlier, right? And now that the bonds are breaking out, but yet the equities are still falling, what could end up happening is the equities can start to skyrocket upwards while the bonds basically consolidate. And the equities, you know, the stock prices themselves will catch up. All right, so that is what I am expecting to happen, because that's basically been the pattern for the past few weeks now, and I mean past few months actually, as we've been monitoring this. So yeah, I mean, as long as we hold above 157, everything else is really just a normal, just consolidation move on the bonds, right? So there's that for the bonds. Let's quickly take a look at the NASDAQ. So quite clearly, the NASDAQ, this is not a bullish close, right? We failed to close above 324.28. Just blatantly, you know, could not close above this level. The RSI looks terrifying, very similar to Apple and Amazon's RSI, right? And the MACD is continuing to fall lower. So overall, nothing is showing a bullish setup at the moment. Everything is pointed to more downside. And, you know, I don't know. I mean, I really wanted to buy into Lotto puts, but I wasn't sure if the IV would affect it. So either way, I mean, I really do think that the market is going to continue falling lower. We saw that from all of the tech stocks. We saw that from the SPY, the IWM, literally everything. So if we break down below today's lows, then we're going to come back and break down below February 24th's lows, similar to what we already did on Microsoft. So the fact that Microsoft broke down below February 24th low is pretty damaging, and it's not a good sign. So overall, the whole market still looks very bearish. There's that for the stock market, but to get, you know, to really put the icing on the cake, put the cherry on top, we need to look at Bitcoin. So Bitcoin currently is the only thing really right now that is showing like not a lot of strength, but it's showing more strength than the entire stock market combined at the moment. we're holding above this 38,000 level. We failed basically at 37.5. We broke down below a bit, and now we are back above 38,500. So the RSI is slowly moving upwards, which is bullish. The MACD is falling lower, yet see, you can see this blue MACD line is falling lower, yet we are breaking essentially and holding above levels of resistance, which is bullish. So it's going to be very, very interesting now if we can, you know, continue on higher on Bitcoin. And if we do, this is going to be a very, very good sign for the entire stock market. But there was no other real reason to go long except the strength in Bitcoin. And just that alone is not a good enough reason, in my opinion, especially when all of the technical indicators look so garbage on the entire stock market. But really, you know, there's that for the entire video. There's that for the entire market. That is my thought process for everything. I hope I help you guys in, you know, sharing my thoughts and everything with you. We've been doing pretty well. Yeah, we're going to continue doing really well. So there's that. Make sure to subscribe to the channel if you enjoy it. Click the bell and follow me on Twitter. And I will see you guys tomorrow. Thank you.